So I'm going to be talking about a case study where I incurred two losses, and I'm going to explain why I incurred those two losses and the reasons as to why I incurred those, and at the same time a trade which I actually won, which is this one, and how I won this trade and on what reasons did I enter this trade and what my analysis was. So just for a higher time frame view, M15 time frame, we are overall bullish. Okay, we are overall bullish, but here we saw a break of structure and we saw a price action making lower low right over here, respecting the smart money trap. I put this as smart money trap instead of demand, but you have to see what price action will do in the next week. But remember this extreme demand right over here, this price action here made a new high previously, so hence this was the extreme demand. Remember this one. Now if you move on to M1, this was the extreme demand right over there. So here the reason as to why I entered this trade, unfortunately I lost it. I put it on my profit account, 1% risk. But here the reason as to why I entered the trade, because the moment New York second hour key time window has opened for me, price action aggressively went low, swept all the liquidity into the extreme demand, and then price action did a break of structure. So I was convinced that okay, we could see a possible reversal from this specific area right over here, and hence I put a stop loss of 6 pips, and then I proceeded to enter, but then I was immediately taken out. And the possible reason as to why was inducement of control. So inducement of control essentially in simple terms means who is really in control, are the buyers or sellers are in control. If you look closely, price action failed to break new highs in the market in the M15 time frame. Specifically, if you look here, price action made the high, didn't make a new low, but in the end here it made a new low but never made a new high. Again, price action tried to break higher but didn't break past this high or even this high. Price action constantly has failed to make new highs, and instead price action constantly made new lows in the market. And inducement of control, or rather liquidity sweeps, reinforced the fact that only sellers were in control. In this case, the previous extreme demand zone here, price action broke the demand, and so buyers might, this was the buyers control. Buyers were enticed to enter because the major point of interest was taken out. So smart money traders would be convinced that okay, this was a huge break and grab of liquidity, and hence push of price higher, we could look for entries. And that's what this buyer's reaction was, and ultimately they were taken out and proceeded to enter into the next extreme demand zone right over here. Since I saw this breaker structure, I was convinced to enter, but unfortunately, it didn't work out. I don't know whether I could classify this as a valid loss, because price action in the breaker structure, it did the inducement I needed in the key time window on a point of interest, extreme demand point of interest. So a lot of stuff were aligned, but I don't know if I really want to put this as a valid loss. But regardless, loss is a loss, and yeah, unfortunately this was what happened. So this was more like a grab of liquidity on the left side and then push lower. That's exactly what happened. So grab of liquidity to break this demand zone right over here, and that's exactly what happened. So that's what happened here, and unfortunately I entered buys and I lost. So that's one of the losses. The next loss was on the next day. So this one on Friday, 24th of July. Here what happened was that price action built all this liquidity. Asia aggressively swept all of this liquidity and gave a reaction. For me, Asia is always a liquidity pool, a manipulative zone, so I don't take trades in Asia. So Asia box right over here, Asia range, and price action, there was some liquidity here. But here what happened was that before London, Frankfurt built up all this liquidity. The moment London opened, price action aggressively went up, grabbed all the Frankfurt high liquidity, Asia high liquidity, and these liquidity right over here. So a lot of it was grabbed. And see what happened here. Price action came to this specific zone, smart money trap zone, and then gave a reaction, enticing people to get into the trade. That is, price action reached a point of interest, and if we go on the left side, this was the point of it, because this was an inducement of this liquidity here, push lower, break of structure, because this is what ultimately broke the extreme demand. This is a relevant point of interest to look out for, but this was, in my opinion, a most likely a smart money trap, and it is not yet grabbed here, but later it was grabbed. So in this case, price action gave a reaction from that point of interest or smart money trap zone, and then entice people to get in. And this is where I made the first mistake. So here, the moment I saw this bearish reaction, I have a lower time frame confirmation called M5 engulfing candle lower time frame entry. So essentially what that means is I go to the M5 time frame and I look for an inducement. Okay, so in this case this was the one, but let me move on to M3 because there's also an M3 engulfing candle lower time frame confirmation entry which I made up, and M5 uh, is also a similar entry. So M3, in this case I looked for M3 time, lower time frame confirmation engulfing entry. In this case inducement was this one. I mean the whole reaction was an inducement, but ultimately this was the candle, and this candle got engulfed by this candle right over here and closed below. So what I want to see is I want to see the engulfing candle engulfing the previous inducement candle. So this is the inducement candle, the next candle engulfing the inducement candle, and then giving a reaction closing at the low, and that's exactly what happened here. I entered with a sound proof stop loss, but unfortunately it didn't work out at that time because at that time price was still going higher to entice people to get in, that is sellers to get in. By this reaction they enticed sellers to get into the trade and ultimately took them out, and I was a victim of that. But in the end price action gave this final inducement. It didn't take out the point of interest itself, but yeah, it gave a reaction doing a break of structure right over here, a break of structure. Okay, now I was interested. So since I saw this break of structure, I decided to re-enter again, and in this case I did a re-entry, and this was the second loss, by the way, and this was the trade that I won. So all these trades were placed in my prop firm account, FTM prop firm account, and yeah, two losses, and this was a win. 1:3 risk reward trade. Here it shows 5, but I will change it to show you how I did the take profit. So in this case, inducement, the entry would have been an M5 engulfing. In this case, M5 engulfing would have worked out perfectly. Right over here, inducement candle got engulfed by the next candle which closed at the bottom, and hence we could have entered perfectly with a stop loss of 8 pips. In this case I entered 7 pips at this point, but here it could have been, you could have entered with 8 pips. But regardless, that was one of the entry types which would have worked out in this case. But what I was looking for was a breaker structure, and that exactly was what's happened here, a breaker structure. So hence I waited for price to retrace back, and I put a big stop loss, 7 pip stop loss, and in this case it shows like it didn't cover the high, but in an MT5 it did cover the whole high. So yeah, in this case it's just a visual error. So regardless, I entered with a 7 pip stop loss. I placed my limit right over here, and then a very conservative entry. So I really wanted to make sure I entered this because I saw this break of structure, I saw the inducement, because I was enticed to enter into this sell trade and I got taken out. That meant that a liquidity manipulation has been done, and since I saw this break of structure, I was I was sure of this trade playing out in the way I wanted, and that's exactly what happened later. So I entered a sell trade here, 7 pip stop loss. I was thinking about putting like a 5 pip stop loss here because imbalances here, but I really want to make sure I enter, and hence I put a 7 pip stop loss. And hence that's exactly what happened. Price action gave me a really good reaction. You know, in this case, price action initially went up to this area, 1:3.43, and this retracement really really brought me to really gave me extra stress, if I'm being honest, these kinds of retracements. But ultimately I decided not to FOMO sell it and instead trust my analysis, and in the end that's exactly what happened. I did trust my analysis fully, and price action gave a really good reaction towards the low right over here. Ultimately price action gave until 4.4, 1:4.4. I was aiming for until this previous day low or rather 1 is to 5, like this, 1 is to 5 risk to reward trade until this Asia low. But I was thinking that previous day low was going to be taken out really soon, but in the end price action ultimately reversed back. So hence, instead of closing at the 1 is to 4.14, or sorry 4.3, I closed at 1 is to 3. I mean, it's not bad at all. 1 is to 3 was my actual initial target, especially because of the large stop loss that I have. And my stop loss range is always between 3 to 7 pips, and hence I entered with a 7 pip stop loss. I should have closed early with 3R, but I was aiming for 5R, and in this case, 1 is to 4.31. Unfortunately, I couldn't close it at 4 because I was sure it was going to reach 5R, but it did not yet. So hence, when the moment I saw price action reverse, because this price action here, I'll just move this price action here, it swept all the liquidity here. Okay, this trend line and these lows right over here, everything was swept. Only this one was left and this one is left. So since everything was swept, the moment price action did a breakout structure like this and I saw the bullish reaction, I was convinced that price was going to reverse back fully, and hence I closed fully at 1 is to 3. And that's one of my take profit levels. 1 is to 3 is my standard take profit level, and I was satisfied with the trade. So that's how I won this trade, guys, and I hope this video was informative. And if you did find it, do like it or share it, and yeah, all that fun stuff. And yeah, thank you for watching.